Hello guys, welcome back to Fun with Frank. Everyone was taken aback by the recent recovery. The market recovered in less than 2 months after falling throughout of 2022. Investors with a strong appetite were looking for the best mid-cap stocks to invest in and the best small-cap stocks to invest in. In this video, we're looking at the top 10 stocks picks for 2023. Before we get started, make sure to like the video, subscribe to my channel, and hit the bell icon. Number 1. Microsoft Corp. MSFT. Microsoft Corp., the most recognizable name on the list, requires no introduction and ranks first on our list. From gaming to the Microsoft Office suite, LinkedIn, and their rapidly growing cloud computing division, Microsoft has been a mainstay as one of the world's largest and most successful companies with a $2 trillion market cap. While Microsoft's stock is currently down 21% from its all-time high, analysts predict that the company's annual earnings per share will increase by 16% over the next 5 years. This is an excellent time to build a position in this blue chip, but high-growth technology stock. Over the last 3 years, MSFT's annual EPS has increased by an average of 24%, driven by an average revenue increase of 15.2% per year, so there's little doubt that Microsoft will recover, just it's a matter of when. Number 2. Roblox, RBLX. Roblox Corporation is a San Mateo, Californian-based video game developer. The company, founded in 2004 by David Baszucki and Eric Kessel, is the creator of Roblox, which was released in 2006. Roblox Corporation employs approximately 1,600 people as of December 31st, 2021. Roblox RBLX recently announced plans to launch 3D advertising, also known as immersive advertising, on its platform in 2023. According to Reuters, immersive advertisements will only be shown to people aged 13 and up. By the end of this year, the company plans to begin testing immersive ads with developers and advertisers. Roblox RBLX 0.79% continues to see an increase in daily active users. But new users are not spending as much money on virtual content as they were before the pandemic. Roblox now has 59.9 million daily active users, up from 52 million at the end of Q2. There is undeniable value here. With more users, Roblox has a better chance of increasing revenue from experiences and content. The shares have a high price-to-sales PS ratio of 9.9, implying that high long-term growth is expected. This implies that higher growth may not be enough to propel the stock higher. Number 3. Apple Inc. AAPL. Apple is a major manufacturer of hardware and software for the consumer market. Its most well-known product is the Apple iPhone, but Apple also manufactures Mac computers and iPad, tablets. It also runs the media distribution platforms Apple Music and Apple TV. Even as the bear market persists, investors may be surprised to learn that Apple, AAPL, negative 1.51%, remains the most valuable publicly traded company with a market cap of $2.55 trillion. Perhaps more impressive is the fact that despite the ongoing decline in technology stocks, Apple has outperformed the broader indexes and many of its peers. From their peaks several months ago, the S&P 500 and the Nasdaq Composite indexes have declined 17% and 26% respectively, while Apple's stock has just shed 13%. Number 4. Snowflake Inc. Snow. Consider Snowflake stock to be a proxy for the meteoric rise of cloud computing behemoths Amazon.com, AMZN, Microsoft, MSFT, and Alphabet's Google, GOOGL. Cloud companies continue to take on more business workloads from large corporations, but Snow stock is expected to fall 49% by 2022. Snowflake Snow is a company that sells data analytics and management software that runs on cloud computing platforms. In September 2020, Snowflake stock completed the largest initial public offering ever by a software company. Snowflake raised $3.4 billion in its initial public offering. The software sector is out of favor. One software benchmark, the iShares Expanded Tech Software ETF, is down 36% in 2022. The index has underperformed the S&P 500. The S&P 500 is down 23%. Number 5. Alphabet Inc. GOOGL. Alphabet Inc. is a multinational technology conglomerate with headquarters in Mountain View, California. On October 2, 2015, it was formed as a result of a Google restructuring and became the parent company of Google and several former Google subsidiaries. For the year-to-date and one-year periods in 2022, Alphabet's stock price fell by negative 29% and negative 26% respectively. In comparison, the S&P 500 has fallen by negative 19% this year and negative 13% in the previous year. In other words, Alphabet's stock has recently underperformed the broader market. However, investors who purchased the company's stocks earlier are still sitting on massive gains. Alphabet's stock has increased by plus 66% over the last 3 years, more than doubling the 30% increase. Similarly, Google's share price has increased by 118% over the last 5 years. Number 6. Shopify Inc. SHOP. Shopify Inc. is a multinational Canadian e-commerce company based in Ottawa, Ontario. The company's proprietary e-commerce platform for online stores and retail point-of-sale systems is known as Shopify. Shopify Inc. US had a market capitalization of $36.1 billion, placing it in the 96th percentile of companies in the online services industry. Shopify Inc. US currently has a price-earnings ratio. Shopify Inc. US has a trailing 12-month revenue of $5 billion and a profit margin of negative 38%. The most recent year-over-year quarterly sales growth rate was 15.7%. Analysts predict that adjusted earnings per share will be negative $0.109 in the current fiscal year. Shopify Inc. US currently does not pay a dividend. A+ investor is assigned to AAII's proprietary stock grades. These provide straightforward A to F grades for 5 key investing factors: value, growth, momentum, earning revisions, and quality. In this section, we will look at how Shopify Inc. US ranks in terms of value, quality, and growth. Whether or not you should buy Shopify Inc. US stock is ultimately determined by your own personal objectives, risk tolerance, and allocation. AAI can assist you in determining both and determining which investments are best for you. Number 7. Block Inc. SQ. Block Inc. is a multinational technology conglomerate based in the United States that was founded in 2009 by Jack Dorsey and Jim McKelvey and launched its first platform in 2010. Since November 2015, it has been traded as a public company on the New York Stock Exchange under the ticket symbol SQ. When you think of SQ stock, you immediately think of cryptocurrency Bitcoin. A large acquisition for Square stock is also being considered, as is a corporate rebranding. Meanwhile, Block stock has declined by approximately 65% in 2022. In intraday trading on September 23rd, Square stock hit a new 52-week low of 54.43. SQ stock has underperformed the S&P 500, which has fallen nearly 23%. EBITDA, or earnings before interest, taxes, depreciation, and amortization, exceeded expectations. The company has reduced experimental and less efficient spending, as well as adjusting its risk-loss modeling and slowing the pace of hiring, said Deutsche Bank analyst Brian Kane in a client note. We believe SQ stock is poised for material margin expansion in 2023 and 2024 as a result of scale and a new cost discipline focus. Number 8. Twitter Inc. TWTR. Twitter Inc. is a San Francisco-based American communications company. Twitter, a microblogging and social networking service, is run by the company. It used to run the Vine's short video app and the Periscope live streaming service. Twitter Inc. had a market capitalization of $31.7 billion, placing it in the 95th percentile of companies in the online services industry. Twitter's Inc's current price-earnings ratio is Twitter Inc. has a trailing 12-month revenue of $5.2 billion and a profit margin of negative 2.1%. The most recent year-over-year quarterly sales growth was negative 1.2%. Analysts predict that adjusted earnings per share will be $1.123 in the current fiscal year. Twitter Inc. currently does not pay a dividend. Number 9. NVIDIA Corp. NVDA. NVIDIA Corporation is a multinational technology company based in Santa Clara, California that was founded in Delaware. NVIDIA's long-term prospects appear bright as semiconductors gain popularity, and the company continues to see success in the industries with the greatest potential. Year-to-date, the stock is down nearly 49%. Since the beginning of 2020, NVIDIA's revenue has consistently increased by more than 40% year-over-year. The gaming segment of the company was the primary driver of its disappointing performance. In the second quarter, NVIDIA's gaming revenue fell 33% year-on-year to $2.04 billion. The majority of this drop was caused by macroeconomic headwinds, putting pressure on consumer demand for gaming graphics processing units, GPUs. Number 10. Meta Platforms Inc. Class A. Meta. Meta Platforms Inc. doing business as Meta and formerly known as Facebook Inc. and the Facebook Inc. is a Menlo Park, California-based American multinational technology conglomerate. Among other things, the company owns Facebook, Instagram, and WhatsApp. Meta Platforms is currently dealing with a softening digital advertising environment as well as its grand metaverse transformation. But I prefer to think in terms of the long term, and it's difficult to imagine the social media company not rebounding strongly given its MAUs and cash reserves. Positives include strong profitability, a low valuation, asset and platform leadership, and solid growth. Solid growth is still vulnerable. It is by far the weakest of the arguments presented above. This is because the company can only add so many users to its existing platforms, and only so much revenue can be extracted. Furthermore, economic downturns will drown out advertising dollars. Analysts predict that the Meta's revenue will grow 7.5% this year, but that growth will accelerate to 16.5% in 2023. Estimates for earnings this year predict a decline, with the bottom line falling by 13%. On the plus side, analysts anticipate nearly 20% growth in 2023. Thank you for watching the video.